Hey all, welcome back to Howieverse. This is your host Howie. Today we're gonna talk about ASML. This stock has running up a lot again and again. So we're gonna talk about my new price target that will you see in this video, and also will I buy at this point or should I stop buying? Let's check it out. The first thing we need to talk about is the earnings. The earnings is in Wednesday, October 15, 2025. That's less than 2 weeks now, depending on when you see this video. This earnings is probably gonna be a week from then. So for the earnings estimate is 6.34 and the revenue estimate is 9.07 billion. So last quarter, they reported the earnings that is on year-over-year basis up 23% for the revenue. However, for the earnings side, the earnings increased by 69%, more than 69% in the last quarter for the net profit. So we'll see if ASML can maintain that type of growth. For example, for the revenue side, we'll see if it can maintain that 20% plus growth in the next earning, which is coming up in about less than 2 weeks. So we have the earnings out of the way. Now we look at the technical chart. And like I mentioned in the previous video, there is a really big resistance on this line right here. It has to take out this low on this resistance and look at that. So the close on that particular day on that candle kisses exactly where the resistant line is, right? And this is just the power of the technical analysis. It works because a mass of people are using it as well and trying to get where the voting on where the price should be at, right? And also, if you look at from the bottom of the chart, so congratulations to everyone that has been buying from this recent low all the way to here. The stock has been up again 45%. So what we trying to do is that where is the next price target now that it has broken up this resistant line, right? The thing is that although it has broken up this resistant line, it has not confirmed yet. So what I mean by that, so if you look at closely where this is at, right? So this candle the next day from this one is actually broken up this resistance, right? So the resistance has been broken. However, it's not confirmed. The reason why I say that is because like the next following day or the next following day, probably over here, we would like to see that it want to take out the high on this particular candle, right? So if I draw another horizontal line right here, in the near term, we want to see if this candle is going to take out this candle on this recent high. But if you look at the next candle, what it's saying over here is that the next candle goes all the way up to the previous day candle, right? That was the high on the candle. However, it do not broken through that candle itself. So if it doesn't take out this particular resistance on this next following candle, then it did this the broken of this resistance line is not confirmed. Additionally, I would like you to pay attention on the last candlestick right here. So if you look at the high for this candle, it is basically touches the high on this previous candle. So the buyer cannot maintain that line and the seller comes in and push the candle back down to push the price action back down. Therefore, this line over here, this horizontal line, acts as a short-term line that we would like to see if the stock can take down that line. For the resistance on this one to confirm that this line has to be broken up so that we can maintain that confirmation that this line has been taken down. Another thing that I would like to bring to your attention is the weekly chart. So if we change the setting here to 1 week, so right now every candle represent the 1 week chart. And If I bring your attention on this blue Fibonacci line right here, if you look at where the stock has run up, the stock has definitely taken out the blue Fibonacci line resistance. And there are two paths for the stock that's gonna likely go here in the short term. So the stock is likely going to retrace back on this blue Fibonacci line, or the second path is that it will go all the way up here to retest the all-time high on this gray line right here. Also, if you count the candles from the last down weeks that has been going up, right? So this is the last candle on the down week, and 1, 2, 3, 4, 5. So it's been 5 consecutive weeks the stock has been going up consistently, and we would like to see if it can maintain the 7 up weeks, lucky number 7, right? Which coincide with the earnings that is in about 2 weeks, right? So if you look at this one, is one missing candle right here, and the earnings week right over here, there is another one missing candle. So it's high, it's likely possibly that the stock can run up to, all the way to the all-time high, which is the second path that we talk about, that is going to retest the all-time high that coincide with the earnings right here. So if the stock can run up to all-time high based on the next 2 weekly candles that make up to the 7 week run up, or the 7 up candles. On the same weekly chart, I will tell you where my new price target is. I found this recently while I was investigating the chart, and I think it's really cool, and I would like to share with you while I'm doing this live, right? So it's a parallel line or a channel. If you draw this parallel from all the way here to all the way here, and then you draw this line right here. So the first thing that I would like it to go is it will go to this COVID low, and this one should go all the way up here, right? So if I just extend this parallel line to touch that point, and I'll fix the one up here to just right about right here. So what's going on here is that since COVID low, it's been going up, and then it kind of pierced this parallel line a little bit over here, and then it goes down, it pierces a little bit on this low side of the parallel line, and then chop away side up, and then go all the way to retest to the all-time high over here. And then it's also on this parallel line, you see that this one is going back to this line, and most likely for the next price target, it might go all the way to $1,200. So if it does go all the way to $1,200 based on this newfound parallel line that we have over here, is first it needs to take out the all-time high, right? So if it takes out the all-time high, possibly is going to retrace back to this line right here, and it will likely to go all the way to around this $1,200 price target. So it could likely happen in the future before it can go down again. Though if it does happen, then I think I'm going to sell the stock on that point, or that $1,200 price target, and then I'll wait for the stock to retrace back again to this all-time to this low right here, and then repurchase the stock from there. So from the technical point of view, that is what I'm going to do. However, from the fundamental side, that is more important than a lot of this technical chart, right? So the first thing that I would like to see is not just the technical chart, but I would like to see the fundamental of the business. Though the business of ASML is really, really good, most likely I would not even sell the stock even it goes up to that price based on the fundamental analysis. However, from the technical side, if I see the technical is there, that is touches that point at that $1,200 price point, and the fundamental is looking shaky, then I would definitely sell. Last thing we're gonna talk about in this video is that am I buying more? Am I holding? Am I just looking for the price action or am I selling? So at this point, I think I'm not going to take any action except this one thing, and I'm going to do a trailing stop. So basically what it is that I will let the stock run up all the way to where it is. However, when it hits my trailing stop, for example, if there is a 5% down day or 10% down day based on that high that it touches, then I'm going to sell my stock at that point. So the trailing stock is really great when things go negative or the downturn of the stock itself. And as you have known, that the stock market has been heating like every single week there is a new all-time high on Nasdaq, on S&P 500. We need to essentially protect ourselves from all of this gain, although we have only buy the stock for about like 3 to 4 months. Yes, we have to pay for the tax. However, if we release all the gain to just holding the stock while it's falling, then I think it's better to just pay the tax and not realizing the gain, right? So first, I would say that I would realize the gain, although like if the stock is going up just because of the economy is shaky. And also, I don't know if you guys noticed that the ADP job number is really bad. So it was expected to go up for a thing, I forget the number, but it was going negative, right? So the job the job market is really shaky at this point, and usually a shaky job market meaning that the economy is going for a bad downturn, and likely for all of my stock that has been going up 60, 70, 100%, I'm going to set trailing stops on all of my stocks. And if it does go down, I am happy to pay the tax and just realize the gain and just wait for it and wait for it to bottom. And we will likely to look at all this technical analysis. I will nibble and also for the fundamentals, right? So you need to keep up with the job market and you need to keep up with the economy, what the Jerome Powell said, and all of that kind of things, so that you are well prepared for the downturn. And like I said, the economy, the stock market has been heating up so much. And based on the economy data that we got recently, things has been shaky and I don't know where it's gonna go at this point. And most likely with this stock heating up and the downturn of the job market, most likely the economy is not gonna hold up. And if the economy is not gonna hold up, the stock market is also not going to hold up once people realize that the economy is bad, right? So there you go. I'm not selling right now. I'm not buying anymore right now. And I'm setting trailing stop. So wherever the stock goes up, it's gonna go up. I will just let it run. And the trailing stop is my defensive move that I set up to protect myself. So all of the gains, I will be happily to pay tax on it. And rather than not realizing the gain and just eat up the downturn of the stock market. In conclusion, we'll talk about the ASML stock. The stock has gone up a lot since the last time we bought it. Also, in this video, we found a new price target for the stock, which is at around $1,200. No, I'm not buying more of the stock, and I'm also not selling at this point. I am doing a trading stop on the stock to protect my gains. And I hope this video helps. I'll see you next week.